Let's take a closer look at the latest round of US-China trade tensions and what they could mean for both countries and the world economy. Recently, the United States, under President Trump, has introduced sweeping tariffs on Chinese goods. These new import taxes are as high as 145% on most Chinese products coming into the US. In response, China has imposed 125% tariffs on American goods. This back and forth is often called a trade war, because both sides are raising barriers to each other's exports. These moves come at a sensitive time for China's economy. The country is aiming for a growth rate of about 5% this year, a figure set by its government. But with these new tariffs in place, many outside observers, including the International Monetary Fund and major investment banks like Goldman Sachs and UBS, are skeptical that China can meet this target. They've recently lowered their forecasts for China's growth, citing the impact of these tariffs. Trade wars don't just affect official numbers. They can disrupt supply chains, hurt businesses, and make everyday goods more expensive or harder to find. These issues don't stay inside national borders. They ripple across the globe. This isn't the first time the world's two largest economies have clashed over trade. But today's tariffs are some of the steepest yet. The latest escalation, dubbed Liberation Day tariffs by the US, was announced in early April 2025. Chinese President Xi Jinping and other officials have responded with increased diplomatic outreach in Southeast Asia and beyond, looking to build alliances against these US measures. Chinese officials, including Zhao Chenxin from China's National Development and Reform Commission, have tried to reassure both domestic and international audiences. Zhao says he's fully confident that China will still reach its growth goals for 2025. He points to solid first-quarter results as evidence that China's economy remains resilient, despite international pressure. At the same time, China's central bank has signaled it will likely cut interest rates and ease lending requirements for banks, steps designed to stimulate economic activity if needed. On the other hand, many analysts aren't so sure. They highlight ongoing challenges for China: sluggish income growth among its people, a struggling property market, and now these tough new trade barriers. No one can say for certain how this trade conflict will play out. What is clear is that both countries are digging in for what could be an extended period of economic friction. Policymakers in China say they're ready to roll out new support measures if necessary, but they haven't given specifics yet. For everyday people and businesses in both countries, it means more uncertainty ahead. The world will be watching to see if either side changes course, or if other countries get drawn into the dispute. In summary, while Chinese leaders are projecting calm and confidence, the experts watching from outside see real challenges ahead. As this story develops, expect continued debate over just how much these tariffs will shape not only China's future, but also the global economy.